Good morning, dear students. Welcome to the home mentoring session of accountancy. Myself, CSK Khanna from the Sri Vidya School, Ambala Kent. Dear students, today I will share with you some special transactions relating to the recording of the journal entries. Now, till today, we had learned so many different type of the entries and how they should be recorded, like opening entries, compound entries, and various other types of the entries, including various types of the variables. Now, today I will share with you some more type and different type of the transaction and how their journal entries to be recorded. See this question number 15 from the exercise. Provide depreciation on furniture rupees 500 and on machinery rupees 2000. Now, first of all, we must know what depreciation is. Depreciation is the reduction in the value of fixed asset over a period of time due to wear and tear, due to use, and so many other reasons. So basically, depreciation is the reduction. So from accounting point of view, we would say that depreciation is a type of a loss on fixed asset due to various reasons. When we say that it is a loss, so automatically it amounts to the nominal account, and as a part of nominal account, we have to debit the depreciation account. Simultaneously, the value of the asset will also decrease on which the depreciation has to be charged. So here, provide depreciation on furniture rupees 500 and on machinery rupees 2000. So the journal entry will be depreciation account debit to furniture to machinery. That is the type of the asset on which the depreciation to be charged here. So automatically the value of these assets being reduced and the nominal account, that is depreciation, should be debited. See here in this particular example, in this question, the depreciation amount on furniture and machinery is given. In other questions, you would find the rate of depreciation is given and the duration is given. For example, provide depreciation on furniture at the rate of 10% per annum for 3 months. So you have to calculate the amount of depreciation by applying the simple formula, like you calculate the simple interest, that is principal into rate into time period. Likewise here, so you will calculate the amount of depreciation here, the value of the asset into rate upon 100 into the duration, that is 3 months, 6 months, 9 months, 2 months, 7 months, like that, divided by 12, because we will convert those months into year as the rate of depreciation is given in terms of year. Now here when the word is given per annum here means in abbreviation you will find P dot A dot, P full stop, A full stop. Per annum means per year. Now if the rate or if the per annum word is not given, you have to calculate the depreciation for the complete year. Just it is mentioned, charge depreciation on building at the rate of 10%. Now here per annum word is not given, likewise duration is not given. So you will flatly calculate for a period of 1 year. डायरेक्टली आप 1 ईयर का डेप्रीशिएशन कैलकुलेट कर लेंगे, और अगर ड्यूरेशन गिवन है तब आपने पर एनम वर्ड के हिसाब से उस ड्यूरेशन का जो डेप्रीशिएशन है वो कैलकुलेट कर लेना है. सो हियर द एंट्री विल बी वेरी सिंपल, डेप्रीशिएशन अकाउंट डेबिट to furniture to machinery. Next transaction is received cash rupees 1000 for bad debts written off last year. Now what we mean by bad debts? Bad debts here means that debtors are our assets. We have to recover amount from debtors. Now practically bad debts is that amount which is irrecoverable from debtors. Debtors से जो पैसा नहीं आया उसको हम कहेंगे bad debts. But when it is recovered, we will say that bad debts recovered. When it is not received, it is our loss. We will debit it bad debts account because it is our loss as we had not received. But when we received it, automatically it will become our income. Here, see the transaction. Received cash rupees 1000 for bad debts written off last year. They were last year written as bad debts, but now they recovered. So automatically it will become our income. and income accounts are nominal here and they should be credited here. So the transaction journal entry will be cash account debit to bad debts recovered. So bad debts recovered will become our income, so it is in the credit side comes. Cash, actually we had received the cash as per the transaction, so the journal entry will be cash account debit to bad debts recovered account. Now next transaction is Ajay Singh was declared bankrupt. He owed us rupees 2500 to us. Nothing could be recovered from his estate. Now we all know that bankruptcy or insolvency is a situation where the debtor is not in position to give the complete amount or nothing is received from them. So automatically it becomes our loss. It is treated as bad debts. Ajay Singh was declared bankrupt. He was declared bankrupt, insolvent. He owed us 2500. हमने उससे 2500 रुपीज लेने थे. Nothing could be recovered from his estate. तो ये सारा लॉस हो गया. हम एंट्री करेंगे bad debts account debit to अजय सिंह अकाउंट. Bad debts हमारा लॉस हो गया. कितने अमाउंट का? 2500, बिकॉज नथिंग कुड बी रिकवर्ड फ्रॉम हिज एस्टेट. उससे कुछ टोटल अमाउंट मिला नहीं है. एंट्री विल बी हियर bad debts account debit to Ajay Singh. So this way we had recorded this entry. But now see, if any amount is received from him, 50 paisa in a rupee is received, 25 paisa in a rupee received, or rupees 1000 received, for example, whatever the amount has been received, that we will debit in the cash account. Whatever has not been received, that remains bad debts. For example, it is mentioned that he has paid 50 paisa in a rupee. So we will calculate 50% of 2500, that is 1250. So cash account will be debited with 1250. Bad debts account debit with 1250 to Ajay Singh 2500. If we say that he had paid 40%, so we will calculate 40% of 2500, that amounts to 1000. We will record the entry cash account debit 1000. Bad debts account debit 1500 to Ajay Singh 2500. So if nothing is received, implied that it is a total loss. So what we will record? Simple bad debts account debit to party or the debtor. If any amount is received, whatever is received, that is debited to cash account. Or if check is received, then check in hand, or it is deposited into bank, then bank account, depending upon the statement. But we will debit that amount. Whatever is not received, that we will debit in the bad debts account. Next transaction is rupee 20,000 for wages and 4,000 for salaries are outstanding. Now, when any amount or any expenses is outstanding, entry will be expenses account debit to outstanding expenses. Like here, we will record the entry wages account debit to outstanding wages. Salaries are also outstanding. We will record the entry salaries account debit to outstanding salaries. We may record this particular entry in two separate parts. One is wages account debit to outstanding wages. Second is salaries account debit to outstanding salaries. If we had recorded it in a single entry, it is equally correct. Complete and full marks will be given to you. So we had recorded outstanding expenses entry, wages account debit to outstanding wages, salaries account debit to outstanding salaries. Basic entries expenses account debit to outstanding expenses account. I will continue in my next video relating to the remaining entries of this particular question.